Hey, hi. Today we do incomplete record. Question number 2. Malala Khan is a trader. Her financial year ends on 31st May. She does not maintain many accounting record, but able to provide the following information on the 31st May 2015. So all these balances for 31st May 2015. So I know all these are my closing. All these are my closing. All these are my closing balance. Okay, after that, I continue. The following adjustments are required for 31st May 2015. So we do the adjustment. First one, a provision for doubtful debt, 2% of the trade receivable should be created. So this is a PDD. What is the formula to calculate PDD? The formula to calculate PDD is your trade receivable times with percentage. Trade receivable times with the percentage, we will get a PDD. So I go here, I write PDD, and then the calculation is trade receivable. How much is my trade receivable? My trade receivable is 7,800. I write 7,800 times with 2%. Times with 2%. Okay, you don't need to calculate now. Later, whenever we do the statement, we will calculate that. Okay, this is just a calculate. You write the calculation. Later, whenever we do the statement only, we will calculate and write the answer. Okay, now the second additional information is machinery should be depreciated 20% per annum using straight line method. Okay, when the question says straight line method, what is the formula to calculate the depreciation under the straight line method? We will take the cost times with the percentage given to us, which is the 20% in this case. So now I want to calculate depreciation for machinery. I go check machinery. Machinery at book value is 22,880. But now I want cost because this is a straight line. So the cost, did the question given you the cost? Yes, they given me the cost. Okay, they given me the cost, they given me the book value. But to calculate depreciation under the straight line method, I will use the cost. So now I write here depreciation on machinery. My machinery cost is 28,600 times with 20%. Okay, later we'll calculate. Now don't need to calculate. Just write this one first. Okay, now the third one. The third one is, see, the motor vehicle should be depreciated by 25% per annum using reducing balance method. Reducing balance method. Okay, what is the formula for reducing balance method? We take the book value times with the percentage given to us, which is 25%. Okay, there's a formula for reducing balance method. So I check my motor vehicle book value. How much the book value? 13,500, and then the cost is 24,000. So this time I will take the cost or book value. I will take the book value. So this one, 13,500. I go up here, I write depreciation on motor vehicle. Depreciation on motor vehicle is, you take the book value 13,500 times with 25%. Times with 25%. You're following me? Okay, we have done all the calculation or all the adjustments. We have done all the adjustments. Now I'm going to check what the question, the requirement, what the question required to do. First one, the question asked me to do, prepare the statement of affairs. Okay, the statement of affairs should be show the total capital. So the purpose we are doing the statement of affairs is to calculate total capital. We want to calculate how much is the total capital. Okay, now this is my statement of affairs. My statement of affairs will start with non-current assets. Okay, my non-current asset, we have cost accumulated depreciation and book value. Okay, now what are the first non-current asset that we can see in the question? I go to the question, I check. Yes, first one I can see machinery. How much the machinery cost? The machinery cost is 28,600. So I go here, I write machinery 28,600. Okay. How much the accumulated depreciation? We need to calculate how much is the accumulated depreciation. So I go to the question. First, I want to calculate how much the last year's depreciation, because on the 1st June, this is the cost, 28,600 is the cost, and the book value here, 22,880. If your cost and the book value is different, means the difference is the depreciation. Okay, I take 28,600 minus 22,880. I get 5,750. This is what is that? Machinery. This is machineries last year depreciation, 5,720. And now we will calculate for this year. So this year's depreciation is, we take 28,600 times with 20%. We'll get another 5,720. So this year depreciation is 5,720. Okay, total up, the total depreciation for accumulated depreciation for now is 11,440. We calculate the last year's one and plus with this year's one, we get the total accumulated depreciation. The accumulated depreciation as at now is 11,440. So now I take 28,600, which is my cost, minus with my accumulated depreciation to date, 11,440. We will get 17,160. That's my book value. After that, next one. The next non-current asset that I can see is motor vehicle. Same way, my motor vehicle cost is 24,000. I go right here, motor vehicle. My motor vehicle is 24,000. 24,000. How much the accumulated depreciation? We will use the same way. So first we calculate the last year's. Depreciation. Motor vehicle, my last year depreciation is, I take my cost 24,000 minus with my book value of the last year's one. So my depreciation 24,000 minus 13,500, I get 10,500. That's my last year's depreciation. So now we calculate this year's depreciation. This year's depreciation is, we follow this. 13,500 times with 25%. I get 3,375. So my total accumulated depreciation will be 1,0500 plus 3,375. I get 13,875. So that's my accumulated depreciation. I write here 13,875. Now 24,000 minus with 13,875, we get 10,125. I think only two non-current assets. So I'm going to total up this my non-current asset. The first 28,600 plus 24,000, I get 52,600. That's my total cost. 11,440 plus 13,875. We get 25,315. That's my accumulated depreciation. And my book value, 17,000 under 60 plus 10,000 under 25. I get 27,285. That's my book value. After that, we have the next part. After the non-current asset, we need to show current assets. What are the current assets that you can see in this question? We check here. Always we write the inventory for 6750. 6750. I write here inventory 6750. 6750. After that, do you see any other non-current asset? Sorry, any current asset? Yes, I can see trade receivable. But remember, your trade receivable got PDD. Trade receivable got PDD. You need to show that also. So I go here, I write trade receivables. My trade receivable is 7,800 minus with provision for doubtful debt. 7,800 times with how many percentage just now? 2%. 7,800 times with 2%, we get 156. 7,800 minus 156, we get 7644. After that, do you see any other current assets? Yes, I can see other receivable. Other receivable also we put under current asset. This is my other receivable. Other receivable is 101. So I think that's it. Only 3 current assets. We will total up the current assets. Inventory 6750 plus 7640 and 101. How much the total? The total is 14,495. So now we total up non-current asset plus with 780. 41780. After that, we have capital. Okay, do you know how much is the capital? No, we don't know the capital. So what we do, we'll just write here balance. Balance and leave it empty. Later, we'll calculate the capital. After that, we're supposed to have non-current liability. Do you have a non-current liability? Yes, we have non-current liability. Our non-current liability is 10,000. So we will pay on 31st July. So the question say repayable on 31st July 2016, but today's date is 31st May. So from this date to this date, we have more than 1 year or less than 1 year. If it is a more than 1 year, it is non-current liability. Yes, it is more than 1 year. So we'll put under non-current liability. So I write here non-current liability. We write here loan. My loan is 10,000. After that, the last one will be current liability. Do you have any current liabilities? Yes, I can see my bank overdraft. So I write bank overdraft first. This is my bank overdraft. My bank overdraft is 4080. Do you see any other current asset and current liability? Yes, trade payable. Trade payable also my current liability. It is 8,100. So now we total up the current liability. The total current liability is 12,180. Now we're going to balance up and calculate the capital. So I don't know the capital, plus with 10,000 plus with the 12,180, I will get the total. This total and this total will be same. So my answer here will be 41780. You minus with the total current liability, minus with the total non-current liability, we will get an answer of capital. My answer of capital is 19,600. 19,600. Okay, that's it for the statement of affairs. After we do the statement of affairs, we will do the capital account. The capital account is here. We read the question, June 2014, Malala Khan capital is 20,000. So this is my opening capital. Okay, opening capital, your balance BD will be credit side, balance CD will be in a debit side. So this is 20,000. Balance BD. Your date will be 2014, June 1. After that, I can see she transferred 5,000 a private bank account into the business. Into the business. If it is into the business, is additional capital. Your capital will be increased. If your capital increase, it will be in a credit side. 5,000. Then we write 2015, January 1. We write here bank because she gave us money. After that, during the year, 31st May 2015, Malala Khan drawing. So this is my total drawing. Drawing will reduce the capital. Drawing will reduce the capital. So we put in a debit side. 2015, January 1. If the guy, if she withdraw the cash, we write here drawings. Whenever we draw the cash, we write drawing. If she draw goods, we will write purchases. We write purchases for 20. Okay, I have included all the information given to me. Now I need to balance up to calculate profit or loss. So I feel my credit side is bigger. So total of credit side is 25,000. Then we have 25,000. Okay, before you write the total, you're supposed to write the balance CD. Do you know how much the balance CD? Yes, the balance CD we take from the answer A. Just now we did answer A. This is the balance CD for capital, 19,600. So I write in 19,600 first before I balance up. So now the 25,000 minus drawing, minus purchases, minus balance CD, I get 2,990. That's my loss for the year. Can I stop here? Cannot, because balance CD must transfer to balance BD. 19,600, right here balance BD. The date will be 2015. Supposed to be May 31st. May means June 1. Okay, that's it, the answer. Thank you so much. Please love accounts. Accounts will love you back. Bye. Bye lang yun po.